Welcome back, Alpha Hunters. Hope everybody had a fantastic week. The markets are closed for the week of February the 9th. And as you could probably see on the thumbnail, question marks on the SPY outlook. Well, I did have somebody last week, a Mr. Brent687, said, if all-time highs can't get you to change your thumbnail, I'm not sure what would ... Now, fair enough. And so you can kind of let me know down below what you would like to see it change to. I don't really want to, say bullish because you never know when this kind of run will stop. I do think we're just in a bubble. That's it. So it's going to run until it doesn't run anymore, and then we'll be kind of back into bear market mode, and we'll probably see October 2022 lows taken out. So it is what it is. Like we're just kind of riding higher. And I'll get into some things a little bit later on towards the end of the video when I talk about the SPX and kind of just where I think we are. I mean, it could last up to a year, but I'll talk about that a little bit later on. But let me know one word down below, possibly what you think the thumbnail should be. Cautious, something like that. Maybe not bearish. Obviously, we are trending up. I've been pretty clear about that. Follow the trend. Move your stop losses up, all that kind of stuff. Because once it turns, it's going to turn. There's only 5 stocks now. That's really kind of helping the bull market continue to run. It is not broadening out. It hasn't broadened out for about a past month and a half. So anyways, let me know one word: cautious, bubble tea, what you would like to see on that thumbnail. But I don't want to put it as bullish. And there's an overwhelming amount of people that say, hey, yeah, just make it bullish. We can make it bullish. I do have a bearish indicator. Once we break this bearish indicator, I'll just relabel it bearish. But as far as for now, I mean, yeah, the momentum and trend is bullish. So just let it ride. I'm just not comfortable saying, hey, yeah, we're going to continue to do this over the next 6 months to a year to 2 years. And that's kind of why I really haven't changed that. So, all right, let's roll on. SPY for the week. Nice little gap down, traded lower there for the first hour or so to start the week. And then that was basically it. That was the lowest point of the week. Nice little bounce there going to midday and then kind of sideways to the end of the day. Tuesday, not much different. Just sideways. Very small day there on Tuesday. Very small resting day. So you got Monday retest, Tuesday resting, and then you got the breakout Wednesday. Nice gap up, retest lower, popped higher there in the first hour, and it was basically it. Just kind of sideways the rest of the day there on Thursday and or Wednesday and Thursday. We didn't really do too much. And then kind of end of day there on Thursday, we started to turn a little bit higher as these moving averages kind of caught up. Friday opened a little bit higher, just kind of ran the whole day on Friday. So there you go. That's kind of the way the week kind of went. Nice little pullback there, kind of the last hour and a half to kind of end out the week. But it was a pretty strong week, pretty bullish. That's a lot of different weeks in a row, like 14 out of 15 weeks in a row. I think we've been positive. So we can take a look at that towards the end of the video. But yeah, very nice strong week there on the SPY. All right, here is the sector performance for the week. You got utilities underperforming the most. Materials, nope, not materials. Staples underperforming the second most. Let's see, communications also down there. Energies, materials, financials, and real estate call underperforming there. Industrials ending the week in line with the market there. Healthcare, discretionaries, and tech outperforming the most. All right, here's a take a look at the VIX for the week. Nice little pullback. Pretty much throughout the whole week, you expect that as the market kind of pushed higher. The interesting thing is as the market was really pushing higher here later in the week, we didn't really see the VIX drop off as much. Probably nothing to worry about. It has kind of stayed down at these lower levels. I've kind of mentioned that over the previous few weeks that, I mean, the VIX can stay down at these levels, even though it's kind of got like a little bit of an uptrend to it. It's not, this is a pretty low level for the VIX historically. So it's not a big deal. It doesn't need to keep going lower for the market to keep going higher. It can kind of stay in these levels here, and the market can keep going higher. So that is not anything unnormal. So, yep, just expect the market to probably keep going up as long as the VIX kind of stays in this level. The DXY, the dollar index, nice strong move on Monday. Tuesday, a little bit of a pullback. Wednesday, a little bit more of a pullback. Thursday, you thought we were kind of done pulling back. We had a nice little upper wick come in that day. You thought we were going to continue to push higher. Well, it comes back down, forms that upper wick. So you're thinking, okay, maybe Friday we break down, because that was maybe we were trying to base there. Now that was kind of like the false breakout day on Thursday, and maybe we're going to break down on Friday, or we're going to consolidate maybe another day or two. Well, Friday we did consolidate a little bit longer. So we're basing here, and the 10 EMA is still coming up. Looks like we're going to find out real quick early next week what's going to happen here with the dollar, because it's sitting basically right on top of that 10 EMA. And I imagine once Monday is probably done, it probably won't break down on Monday, because Tuesday we're going to get some very important information. Next week we're getting quite a bit of inflation data, CPI Tuesday morning, and then PPI later in the week. I believe it's on Friday. So Tuesday we'll probably get some pretty good movement as far as a lot of different things, as far as like dollar yields, that kind of stuff. So that'll probably also drive the market. Anyways, expect Monday probably not too much to happen. If it pops a little bit bullish, probably won't even be that big of a deal. But Tuesday will make up probably what the dollar will be doing going forward. Anyways, if it breaks down, okay, it's going to break down. If it breaks up, it'll break up and continue. The GLD Gold Trust. All right. Yeah, I mean, it's just hanging in there. To me, it's just still kind of basing. Yeah, that's all I got. I mean, it's not really doing a whole lot. Kind of mentioned it might be in here, and it might be basing a while. Mostly the dollar looks somewhat healthy. It looks kind of bullish, but that's not going to be bullish for gold. But gold hasn't been particularly bearish, so gold just might be consolidating in here for a little bit. So not a big deal. I'd still be buying on any dips. 10-year yield. So kind of just briefly talked about that DXY there. 10-year yield, nothing different. It's still going to have a huge day coming up on Tuesday of what's going on. What's really going to matter here Monday is if we push higher on yields, get over this 4.2% level, which is basically the top so far of 2024. And if we get over that, and then Tuesday inflation data is, the market likes it and the yields start to drop again, well, that'll be a false breakdown or false breakout, and then we start to roll back down. So that'd be interesting to see if we do that, or if we pull back a little bit on Monday and then Tuesday we get inflation data, comes in a little bit hot, and then we see yields start to tick back higher. So it'd be interesting. I mean, obviously we are a little bit higher from when we got inflation data back in January. So yeah. Other than that, Tuesday will be a very important day for yields. 10 and 2 inversion, not too much going on. Just kind of a pretty quiet week here for the 10 and 2 inversion. All right. HYG, definitely sideways consolidating here. Maybe we're setting up a pretty long stair step sideways pattern. Maybe. Probably going to depend a lot on yields, what yields do Tuesday with inflation data. But for now, I mean, they're not breaking out or breaking down. So you can obviously very clearly see resistance above, support below. We break one of those, we're probably just going to continue moving in that direction. LQD, speaking of breaking support or resistance, well, we broke some support this week here on the LQD, and we did it right away on Monday, but we kind of bounced off the 50 EMA, tried to continue that bounce Tuesday, a little bit Wednesday, but kind of got a little bit of an upper wick there on Wednesday. Came right back down through it on Thursday. Closed below that 50 EMA on Thursday and then on Friday as well. So it's kind of the lowest point going back to mid-December that we've been. And yeah, I mean, it's kind of hard to make a call right here just because we got inflation coming up on Tuesday. So it doesn't look good. So if it doesn't get back over this by Tuesday or Wednesday, yeah, bonds are probably going to be looking kind of bearish. TLT, though, hasn't broken down that level in January. And yeah, I mean, I'm not going to say anything any different from the LQD. I know it hasn't broken this level down, but I mean, it was already having a pretty bearish January before it had this 4-day rally last week, I believe. Yeah, last week. So TLT, I mean, can definitely just continue bearish, and we'll find out on Tuesday. So yeah, if Tuesday we see some things break down, like bond prices break down, but yields are pushing up, yeah, just expect bonds are going to be breaking down. All right, take a look here at the SPX, the S&P 500. We did hit 5,000 this week, so clap, 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 applause, and all that. It was pretty cool to actually see that 5,000 handle right there. It was pretty neat. I can say I lived to see that. I think life is complete now. But kind of, I'm going to go back to where I kind of started the video, kind of just where I think we are right now. So back in 1998, this is a very interesting time period because there was many people, many economists, many market people that thought we were going to go into a bear market. And I'm going to kind of relate that to our current, past year or so time period, maybe past 2 years of market action kind of at this time period as well. But a lot of people thought we were going to go into a bear market in 1998. And then out of nowhere, we didn't. And we went on a rally. We went on a pretty good rally here. That lasted basically until the top there of March of 2000. And so I guess it lasted, 15 months? I guess we bottomed September, October, 98. Yeah, about 15 months, 16 months. So I guess what I'm trying to say here is I don't think, I still don't think we are in a long-term sustaining bull market like a decade long, like we did during the 2010s. I don't think we're going to be anything like this. Not with any major corrections. I think we were kind of in the pace of doing that in 2022, but something happened. Now, very much like 1998, the thing that happened back then was stimulus. If you're unaware of, or maybe you're just young, you don't fully understand of what happened back in the late 90s, the Y2K, if you've ever heard of that, Y2K was a big deal. Everything was starting to be run by computers. And before, most computers were dated with a 2-digit year, not a 4-digit year. So many people thought when 2000 rolled over, computers were going to think we went from 1999 to 1900. And obviously with financial transactions and many other things, that would have been a very bad thing. So Y2K funding and stimulus from around the world started happening, and that's why we went on this bull market. Okay. Many people thought that was so weird that we kind of went on this bull market. Over the past year, I had someone, but I saw someone explain why this bull market happened. And they said it was because of the Y2K money. I was like, yeah, that actually makes perfect sense. Okay. So anyways, go back to our recent time period. So we were having a pretty good pullback. We were pulling back to the blue line, which is that, long-term exponential trend line that we've had since, late, what was it, 33, I believe. Let me go to a monthly chart. Yeah, since 33. Now, the reason why I have it from there is because that's when we in the U.S. went off of the gold standard. So since that's when we went off the gold standard, we now grow at an exponential rate of whatever that is. I forget what it is, like 12% a year or something like that, per year. I believe. It's been a while since I actually looked at that number. I do have that calculation, but it's been a little bit. But anyways, we were almost pulled back to that, and we did that back in 2000 in this bear market. We pulled back once we were done and topped out and the tech bubble busted. We pulled all the way back. And do you know how big of a recession that we had back in this time period? We had like a very minor recession, like right here in the early 2002 period. That was it. We had a 50% pullback, I believe, from top to bottom, 50%, but we had a very minor recession in early 2002. That was it. It wasn't a major one like what we had in 2008, 2009. That was we had a major recession. And so you can see, what that one was all about. And we had a 50% drawdown as well there. We pulled down 60%, almost 60%, 58% or so. Anyways, the point what I'm saying is I didn't realize the stimulus that was introduced back in August of 22 would lead us to go on this kind of a bullish move. I really didn't. So, and that's kind of the catch-22. You never know how much of a impact stimulus will be. And you might be like, well, we introduced stimulus in August of 22. Yeah, we actually did two. We did the CHIPS Act to help improve manufacturing of chips in the U.S. Semiconductor chips, right? Not potato chips, semiconductor chips. So that was one, and then the other one was I forget what the other one was. Oh, I had to look it up. It was the Inflation Reduction Act, which probably has to be the most oxymoronic thing I've ever heard as far as a bill. Figure a politician would come up with that. But those were the two bills, and they were both passed within a week of each other in August of 22. So that is what has led and kind of helped spurred, some economic activity here over the past year and has kind of kept things afloat. Obviously, getting semiconductor companies to spend money and build plants and things like that. I mean, it has some economic impact that might last a while. Now, the one thing I would say is like 1998 to 2000. I mean, that one lasted 16 months. It's kind of difficult to see kind of like where you take it from the bottom, like October to October of 22 to March of this year. So we got like another month? I don't think so. I mean, maybe that's possible. I mean, we could also go another year seeing some bullish moves. So the thing I'm going to say is I'm okay with saying, taking bearish off the SPY outlook, kind of title there. But as far as, do I want to say like, hey, everything looking rosy and we're all bullish? I'm not going to go down that road because that's some of the things I covered during the week, especially on the live stream. Like, we're not seeing revenue growth from every company out there. It's like basically one, NVIDIA, and that's it. Even AMD and Broadcom aren't even seeing revenue growth like NVIDIA is. Actually, AMD is not even seeing revenue growth really almost at all. So there's a lot of reasons why I don't want to be like, hey, yeah, just be bullish. I just think you just want to be protective long, protective bullish. And maybe that's what we call it, just protective bullish or cautious bullish or something like that. But I don't want to just, tell people to be just outright bullish because, in the next 3 months might completely be different. I think there's better opportunities out there in the world. So I think the concentration in the tech area is, and even in tech, it's just more concentrated into just a few names. Not like the dot-com bubble. Dot-com bubble, it was like everywhere. So here it's just small amount of stocks that are doing anything. So here's take a look at the RSP, the equal weight SP 500, and yeah, you can see like we're starting to trend a little bit, get a little bit of a breakout here. But this is what I mean. Like we're not seeing it. It's not broad based. It hasn't been broad based here over the past month and a half, going back to mid-December. So almost 2 months now. Like we've just kind of been here in this area, and it's been a struggle bus to get the RSP to go higher. So it looks like it's going to break out. So we'll see what happens this next week. The DIA, the Dow Jones Industrial Average, I mean, it looks okay. It's still been trending higher, and that's kind of the thing is like, yeah, I mean, we're trending higher. So you're just kind of moving up stop losses in any major kind of bearish levels. But for now, you just kind of like let it run, and you see what kind of pullbacks you get. And if it kind of turns up, then you move it under, whatever bearish move you get. So there you go. I mean, it's not complicated. But that's kind of just being a professional in the markets. You just got to take the wins where you get them. IWM, though, did some pretty good things this week. Over the past couple weeks, this thing has really kind of thrown some wicked curveballs. You thought we were going to break up. We wound up rolling right back over. Looked like we were going to start to massively break down from this false breakout that we had in late January. And then we find redemption off the 50 EMA this week, and we are back up to the highs that we had in late January. So, yeah, it's an interesting one. Kind of was mentioned this one Wednesday. Like if we got above the 10 and 20, it's just going to quickly move up to this level that it got to today. And I would just be a little bit more cautionary here over Monday. Like if we just kind of pull back a little bit, maybe you pick some up, expecting it to kind of break out then on Tuesday, maybe Wednesday. But Tuesday kind of scares me a little bit, I'll be pretty honest. And here you go. Here's take a look at the Qs. Qs just continue to just push higher. Looking pretty good. It's still trending higher. Just following those major bearish pullbacks. Not really major bearish pullbacks, but we have a very strong trend. It can very easily roll over and be strong bearish too. So we have plenty of room to correct, have a major correction. So you just want to make sure you're locking up some pretty substantial gains on some of these moves on any kind of stocks you have, especially like individual stocks that have been running. SPY looking pretty good, still trending higher, looking pretty good. Let's say the most important level is probably going to be this one right here between mid 460s to mid 470s. But you also got this little bit of a pullback spot around 482-ish. That if we got below that, yeah. We're not really, we're getting kind of at the point where we're just getting one-day snapbacks and we're just getting bought up. You can see kind of how we did that back here at the end of January. So anyways, yeah, I'm very, very clear on over the past few months that, I wasn't really wanting to be bearish, but as far as the market goes, I can very clearly see the trend. I do see it. So I just don't think it's going to be a long lasting one. That's the only thing. So, Alpha Hunters, have a great weekend. It's Super Bowl weekend, so have fun with your friends and family and activities and doing all that stuff. And see you next week. Take care, Alpha Hunters.